This is Homebuyer Radio with home loan expert Dan Moralez. Dan has been one of the nation's leading mortgage lenders since 1991, and weekly he shares with you valuable insight into the home buying process. Whether it's your first home or not, Dan will help you have a better understanding of the home buying process. Let's get started with this week's episode. Dan, what do you have for us this week?
Hey, thanks, Pat. It is Dan Moralez. This is Homebuyer Radio, episode number 169. Hey, last week we were talking just about credit scores and just kind of a quick fly over some general information as it relates to credit scores and credit in particular. This week here for episode number 169, I want to talk more about two things in particular. One is credit utilization, and the other one is the impact of collection accounts and how they can impact you. Now, let's start by talking about collection accounts and what happens. So a lot of times clients will get these notices that, hey, you've got a $10 bill with your dentist, or you have a bill with your doctor that you think it should have been paid by your health insurance company and they didn't pay it. So you're not going to pay it. I'm not going to pay that bill. It's not my bill. The insurance company should have paid it, and I'll let them figure it out, and I'm going to dispute it with my insurance company and so on, okay? Well, in the process of you doing that, what happens is your doctor or your dentist or your provider ends up taking that information. They turn it over to a collection agency. And you think, hey, no way, this collection agency is not going to chase me for 10, 15, 20 bucks. I'm not going to pay it, blah, blah, blah. Well, then that collection agency sticks that on your credit report. Guess what? Even if that bill is only 10 or 15 or 20 bucks, you just took a massive hit on your credit score. And you may think, well, why? It's such a small bill. Who cares? It's a small collection. Why am I getting, hammered on my credit score? Well, the one thing I'll tell you is nobody can tell you the exact algorithm as to why different things impact your credit score the way they do, as much as we can tell you that they do. So when you ignore that $10 or $15 bill and it ends up being a massive, impact on your credit score because it shows up on your credit report, don't say you weren't warned, okay? So when you get something like that, I had a client one time who had a water bill, all right? She was a college student at Michigan State. She had a $15 water bill from the city of East Lansing that showed up on her credit report. It cost her 50 points on her credit report. 50 points. Huge impact on her mortgage terms and mortgage insurance. She was able to get it removed, but after it took her about a month and some change, okay? So get ahead of that stuff. Just don't let it happen in the first place. If you have a dispute with your medical insurance company, maybe you pay the $10 bill and you have that dispute with them after the fact and you get your money back versus having it report on your credit report and you taking a big hit on your credit score, okay? That stuff is avoidable, guys. Sometimes it's okay to give up your right to be right and save yourself from a massive impact on your credit score because you got into a dispute with your medical insurance carrier, okay? So that's something that you can do. Avoid collections at all cost, right? And if you have collections, now a lot of times this is where somebody else, you can have a different problem. Maybe you have a bunch of collections and you're like, okay, well, before I apply for a mortgage, I'm going to start paying all these collection accounts off. And I'm going to pay them in full. Don't do that. If they've already been reported on your credit report and you have those collections out there and they've been out there for a number of years and you think you're going to go through and you're going to get ready to buy a house and you're going to just start paying all those collections and then that way they're all paid off by the time I apply for my mortgage, you actually could have hurt your credit score in the process of doing that because what happens is when you paid them, you updated the date of most recent activity and that most recent activity can impact your score. So don't do things if you're not sure what the impact's going to be, and most of you are not going to know what the impact's going to be. That's why you need to get pre-approved first so we can guide you through what things you should or shouldn't be doing and how it could impact your ability. And quite frankly, it impacts your mortgage terms if you do something that's going to impact your score. So it's really important that you have expert guidance. Did you catch that? Expert guidance. Why did I say expert? Because I have had a number of mortgage people that have told clients the wrong thing to do. And those clients have done that, if you will, information, or they followed those steps that somebody else told them, and it actually did more harm to them. You have to work with experienced people, such as myself, who know what they're doing. because if you don't, you may get to pay the price for them having the opportunity to gain experience at your expense, right? Because they didn't know what they're doing. So when it comes to collection accounts and stuff like that, ideally, don't get them in the first place, okay? If you do have a collection account, don't pay it until you've talked to a competent mortgage loan officer, such as myself, and we guide you and direct you on what you should do to put you in the best overall position, okay? Now, the other thing I want to talk about is credit utilization, okay? Now, what credit utilization is let's just say you have a credit card, and that credit card has a $2,000 limit, okay? If you have a balance at the time your statement is cut, and let's just say your balance is $1,500 on that $2,000 limit. That means 75% of your credit limit was being utilized, okay? Anytime your balance is greater than 50% of the credit limit, it has a really big impact on you. Now, there's a couple of thresholds, right? And if you can get less than 30% of your credit card balance being used, that benefits you even more. If you can get less than 10%, that's even better yet, okay? So anytime you have a balance in proportion to your credit limit and it is greater than 10%, you're going to have some kind of impact to your credit score. If it's greater than 30%, it's a bigger impact. If it's greater than 50%, it's an even bigger impact yet. So what happens if you're one of those people who says, hey, I score a ton of points, I get free stuff, I get free airline tickets, I get all kinds of free stuff as part of having this credit card. So I use it every month, but then I pay it in full every month, okay? So what happens is maybe you have a $2,000 limit and maybe you charge $1,500 a month and maybe you pay that $1,500 in full every month, but it's still reporting you have a 75% utilization. Well, it's doing that because what happens is what gets reported on the credit report is what your balance was at the time your statement was cut. So even though you may pay that balance in full every month and you don't pay any interest, you still have 75% utilization, which impacts your score. So one of the best ways to game the system, for lack of a better term, would be to go through and find out when your statement is cut. If your statement is cut on the 10th, then go to your credit cards company's website, log in on the 5th, pay your balance in full on the 5th, so by the time your statement is cut, your balance is zero or it's very little at that point in time. It lowers your credit card utilization, which makes your score look much more favorable when it's all said and done. Now, if you're somebody who's normally carrying a balance, then do your best to get under the 50% of your credit limit, if you will. And then, try to get under the 30% and so on. Sometimes what we'll do with clients is we'll look at, all of the different credit cards that they have and different accounts, and we'll put together kind of a comprehensive plan to say, okay, if you can do this combination of things with these 3 or 4 different accounts, we can move your credit score 30, 40, 50 basis points. Oftentimes, that's going to impact your overall loan terms. It's going to make them more favorable in most cases, and it can make it easier for you to qualify as part of the mortgage process because we put together a game plan that works for you. So if you're thinking you're going to buy a house, you want to get pre-approved, let's get that process started sooner, right? Let's get you in the best overall position we can be, because there's nothing worse than you get a house under contract and you go through and you decide, hey, cool, I got my house under contract. I'm going to come into the bank and get a mortgage. And then you find out that there's things you could have done in advance that would have saved you a bunch of time and money. And now you're either going to scramble to do those things or you're going to pay a premium because you didn't give yourself enough time to get this process started sooner, where you could have saved yourself a bunch of time and money as part of the process. So let us help you by you helping yourself and starting the pre-approval process sooner so that we have a solid game plan for you and we're able to put you in the best overall position when it's all said and done. Hey, again, I'm Dan Moralez, America's Mortgage Man. Do me a favor, share this podcast with friends and family. This has been a labor of love for me for a couple of years. It's meant to educate people and just help them understand, the different things that, can happen that would hurt them. I see so much misinformation out there. I've been lending since 1991. I can tell you, I see a ton of misinformation out there. I see clients that are told things that are wrong all the time. And oftentimes it can even come from real estate agents or mortgage professionals that are not competent and they don't know what they're doing. That is all the more reason why you need to have me and my team working for you. We lend throughout all, 50 states. There's only a couple states that we don't lend in. And in those states, we have solid connections that we can get you connected with. So you're always going to have somebody who's competent and knows what they're doing and is going to take good care of you. Hey, we'll be back next week with another episode of the podcast. I hope you have a great week. Talk to you soon. Bye.
Homebuyer Radio is a production of Dan Moralez, home lending expert with Northpointe Bank, NMLS number 709729. Dan can be reached at 616-931-4629 or online at danmoralez.com. Thanks for listening, and we invite your questions and show ideas at homebuyerradio.com. All loans are subject to credit approval. This is not a commitment to lend. Northpointe Bank is an equal housing lender. All rights reserved.